Before I share this strategy for small trading accounts, we're going to set up the technical indicator we'll use for it together. Select this one. Next, we go into the indicator settings to modify this box. Delete 1200 and type in 1155. Don't touch the other boxes, and we can also change the thickness of the moving average for better visibility. We can delete that and confirm. This technical indicator will give you buy and sell signals for scalping. I'm on a 5-minute time frame on gold, and we're going to look at the details of this strategy together now. I'll let the candlesticks run until the indicator gives us a buy or sell signal. You can see here the technical indicator is giving us a sell signal. With this red zone and this little red triangle here, the indicator estimates that at the close of this 5-minute candle on gold, it's better to sell. You also see the moving average in blue. And the first important point for this strategy is that when the indicator gives you a signal, that signal must break the moving average. The candlestick must break the moving average to the downside. That's the case here, so we can take a sell position. We always wait for candle closes to buy or sell. We put the stop loss just above the wick because we estimate that if the market returns above this wick, it could potentially continue its minor uptrend. For the target, you aim for a risk reward of 1.5. That gives us a target here, and you see the market hit the target just 15 minutes after your sell. We let the candlesticks run and wait for the next trade. We can see here that the indicator gives a buy signal. The problem with this buy signal is that while the candle giving the signal is indeed bullish, so the candle goes in the direction of the signal, however, you see that the candle doesn't clearly break the blue moving average to the upside. You really need a clean break to be able to take the trade, so I decide not to follow this trade and simply wait for the next signal. And we can see that the market very quickly after gives an opposite signal, a sell signal. Yeah, you can clearly see that after this candle giving the buy signal, the market hesitates. We have dojis, hammers, and in fact it's a small range. So we were right not to follow the signal because here you see we would have hit the stop loss. However, this signal is very interesting because as you see, the candle giving the signal is bearish and also very impulsive. It strongly breaks the moving average to the downside. There's no hesitation, so we take a sell position. We put the stop loss just above the wick of the candle given the signal because we estimate that if the market breaks back above this small resistance zone, well, it's to go higher. And for the target, a risk reward of 1.5 as before. We wait until the market gives us either the stop loss or the target. We see that the market hit the target here. We wait until the next signal from the technical indicator. You can see that the indicator just gave a buy signal right here. Very interesting setup because you see that the candle given the buy signal is actually already well above the moving average. The breakout occurred on the previous 5-minute candle. The trade is very easy to take here because you can clearly see that in terms of price action, the market is breaking its bearish trend line to the upside. And so here with the bearish trend line breakout and the moving average breakout to the upside, you have excellent bullish price action. So you wait for the close of the candle that gives the signal. You place the stop loss right at the wick of the previous candle, and we look for a risk reward of 1.5 as usual. Here, once again, the target is reached by the market. This indicator is really effective because it's based on very basic concepts of technical analysis and price action. The indicator monitors momentum and gives you the best time to enter a position. We wait until the next trade. You can see that the technical indicator has given us a sell signal. Right here, we indeed have a bearish candle on the sell signal. Then, for the second step, you see that the bearish candle strongly breaks the moving average to the downside. Both criteria are met to take this trade. So, as you've understood by now, we wait for the close of the signal candle, entry price here, stop loss just above the wick here, and a risk reward of 1.5 as before. You see that very quickly, 10 minutes later, the market reaches its target. First step, you add the technical indicator. Next, we go into the settings to make a few changes. You can delete 55 and type in 50. Then you click on the style category. You can change the colors of the Bollinger Bands. You can delete that. This technical indicator will offer you a day trading strategy based on Bollinger Band breakouts. Every time prices break out of the Bollinger Bands, it'll offer a sell opportunity or a buy opportunity. You have the upper Bollinger Band, the lower Bollinger Band, and the middle line, which will help us detect trend reversals and trading opportunities. You can see, for example, that it goes from red to green, then turns red again. You'll see it later in the video. I'm going to explain how this technical indicator works. And pay close attention because I've been able to do many tests and it's really very effective. We'll let the candlesticks roll and I'll explain the day trading strategy that I'm sharing with you today. You can see here that the technical indicator is given a sell signal. First, you can see that the middle line was green because the market was bullish, and it just turned red at the same time the indicator gives you the sell signal. The signals are based on breakouts of the lower and upper Bollinger Bands. Here, we're going to look at the lower Bollinger Band, and you can see that, indeed, we had a slight breakout. The problem is that the following candle will completely re-enter the Bollinger Band and will even totally engulf the previous bearish candle. Remember as rule number 1 that to follow the signals, the breakout must absolutely be clear. The market actually needs to break the Bollinger Band and settle below it without re-entering. That's why I'm deciding not to follow this sell signal. So I'll let the candlesticks roll to wait for the next signal from the technical indicator. And you can see here, we have a buy signal with the blue arrow on the chart. Right now, it's much more interesting than before because as you can see, the market is really settling above the upper Bollinger Band. That means the breakout to happen here is really solid. You also have the red line turning into a green line. So the middle line is becoming bullish. It indicates that there's bullish liquidity, that there's a buying psychology currently in the market. And so you have all the price action criteria and technical indicator levels met to take this buy confidently. The bullish candle given the signal is this one. So we're going to wait for its close because we always wait for candlestick closes to take them into account in a technical analysis. You're going to have to place it at the middle line because we believe that if the market re-enters the Bollinger Band, it's a very bad sign for buyers. And for the target, we're going to aim for a 2-to-1 risk-reward ratio. We let the candlesticks play out and we can see that the market has exploded to the upside. I'll let the candlesticks run and wait for the next technical indicator signal to see if it's worth following by looking at price action, performing a professional technical analysis, and obviously considering the indicator signal. You can see the market completely took off following the bullish signal we tracked earlier. We're staying patient, waiting for a signal from the technical indicator. We can see a sell signal being given by the technical indicator. We actually have a breakout of the lower Bollinger Band with this massive bearish candle, which is a very interesting sell signal. We also have the midline turning from green to red. And when the indicator gives its signal, we're well below the Bollinger Band we just broke through. So even if you see it pull back a bit later, right here in real time, with just these two candles, we enter a short because of the strong bearish volatility breaking the Bollinger Band. It comes back for a retest, giving us our entry price at the close of this 1-hour candle right here. We place the stop loss above this previous market peak because we assume if the market breaks that high, it'll continue upward to test older resistance levels. Now, you have to be patient until the market proves you right or wrong. The market did briefly move back inside the Bollinger Bands, but notice how it bounced off the midline to hit a new low. Afterward, the market formed lower highs and lower lows, which is the textbook definition of a downtrend. So the technical indicator did a great job spotting that sell signal for the upcoming downtrend. I'll let the candles run, and together we'll find the next trade, analyze it, and see if all the signals align to follow the indicator's lead. We can see a buy signal being generated by the technical indicator. You see the market consolidated for a while after the big drop, and then suddenly we get a bullish breakout of the Bollinger Bands, followed by, remember this is key, the market holding above the bands. You also have your midline clearly turning from red to green. You can even add some extra technical analysis with the break of a bearish trend line. This is the candle that gives the signal. We wait for it to close, which gives us an entry price right here. We set the stop loss and aim for a 2-to-1 risk ratio, just like the previous 2 times. You add this technical indicator. We go into the settings to make a few changes. You delete 40 and you type in 50. On the chart, you have a very effective indicator that will give you buy signals and will also give you sell signals. To improve the results of this strategy, we're going to use another indicator. You replace 14 with 21. We're going to make the 50% RSI line much more visible because we'll use it for this strategy, and we can confirm when prices are above the 50% zone, the market's bullish, and when prices are below the 50% zone, the market's bearish. For this strategy, we'll use the breakouts of the 50% RSI zone, whether to the upside or the downside. I'm on gold on the 5-minute time frame, and I'm going to fully explain the scalping strategy I'm sharing with you today. We let the candlesticks play out and wait for a signal from the technical indicator. You see that the market for now is bullish. And we suddenly have a bearish signal here. The technical indicator here is simple to understand. When the market is above the green cloud, it's bullish. And when the market goes below, breaks this green cloud to the downside, it becomes potentially bearish. That's why the technical indicator gives us a sell signal. To confirm this sell signal, we're going to look at the RSI. And for now, the RSI, as you can see, is still at the 50% level. So according to the RSI, the market, for now, remains bullish. That's why I'm waiting a bit before selling. Even if the signal is given by the indicator, I absolutely want the RSI to go below 50%. So we wait, and we can see here that the market has just broken 50% to the downside. It's very slight, I'll grant you, but it's enough to confirm the sell signal from the technical indicator. So we're going to sell at the close of this 5-minute bearish candle. We put the stop loss just above the red cloud and aim for a risk reward of 2. Then you have to be patient until the market reaches your target or your stop loss. We can see that on the RSI, the market has indeed gone below the 50% zone, and we've just reached the target here. So for now, the market is bearish since it's under the red cloud and it's below the 50% RSI zone. We'll let the candlesticks play out, being patient until the next signal from the technical indicator. We can see together that the technical indicator has just given a buy signal. We can also see that the RSI has just broken its 50% zone to the upside. So you have all the factors coming together to take this buy as soon as the indicator signals. We set the stop loss below the green cloud and, as before, aim for a 2-to-1 risk-reward ratio. By having a good risk-reward ratio, you can afford to miss a few trades. For example, out of 10 trades, you only need to win 5 to start being profitable. On this trade here, if I risk $50 on the stop loss, it's to gain at least $100 if the market hits the target. Once the decision is made, you must stick to your plan and just be patient. The market has just reached the target. That's a second consecutive winning trade. I'll let the market run until the next technical indicator signal, and we can see it's just been given here. A sell signal. The green cloud is turning into a red cloud. You have the moving average crossover, you have the sell signal, and here on the RSI, you have the bearish break of the 50% level. Everything is lined up once again to take this short trade because we expect the market to then stay below the 50% RSI level and move under the red cloud in a downtrend. We set the entry price here, place the stop loss above this wick, and aim for a 2-to-1 risk-reward ratio as you've gathered. I'll let the candlesticks play out.